Hello friends, our today's topic is goods and service tax. By far the most important tax reform in the history of India. There has not been such a big reform in the history of indirect taxes since 1950. This is a big opportunity for all the chartered accountants, all the practitioners across India. Your clients will need your advice, and today I'll help you with the entire regime of GST. Even if you have not read a bit, I promise you after this session of 1 hour, you will get full knowledge of what the GST is all about. Next slide. Next slide is about myself. I am a chartered accountant, company secretary and DISA qualified professional. The rest of it you will come to know slowly. Coming to next slide, why do we need GST? There are next slide. There are number of problems in our current indirect tax structure. Let's take all of them one by one. The number one problem is classification disputes. Classification disputes meaning thereby whether a particular commodity being sold is a good or service. If you will have a look on the Constitution of India, you will come to know that the entire regime of taxation has been divided between central government and state government based upon the criteria that whether a particular commodity sold or supplied is a good or service. My dear members, if you will look closely, no commodity can be bifurcated absolutely into goods or a service. Let's have a look at this table. This table is made of wood. What do we say? Whether it's a good or a service? It is none. It is both. If had it been the only good, then can we sit on a tree? No. There was some labor being applied on it which converted it from a log of wood into a table. So my dear friends, there cannot be any commodity which is only good. Similarly for services, as a chartered accountant, can you render a service without using any goods? No. You need computers, you need papers, you need pencils, you need pens, etc. So there cannot be a commodity which is only a good or a service. It is always both. So why do we have a taxation system which needs us to bifurcate and lead us into litigation between the central government and state government? So this is the first problem in our current indirect tax regime. Our next problem is number of indirect taxes. If we will look at our indirect tax structure of India, there are so many taxes, whether it's a value added tax, CST, sales tax, entertainment tax, luxury tax, entry tax, octroi tax, so many taxes. Why do we need so many taxes? And to assess all these taxes, we have so many authorities. For a single business, I am a chartered accountant, for a single business, why do so many authorities visit my office? If I am running in a hospitality industry, then why do so many authorities visit my office? There is no need for so many agencies. There could be a single agency rendering assessment services for all the acts. Next problem is we don't have uniform procedures, we don't have uniform tax rates, we don't have uniform returns all over India. This creates a lot of problem to a businessman. While taking a decision whether I should practice in Delhi or should Mumbai, my decision should be based upon what are the operational benefits in Mumbai vis-a-vis operational benefits in Delhi, rather than checking out what are the tax rates and what are the exemptions. Besides this, the procedures are very different. So with the GST, we will be imbibing on a single procedure. Next problem is the credit of value added tax is not available against central value added tax. That means the value of state taxes are not available against the taxes of central governments. There are numerous state taxes. Can we move on to the next slide? There are numerous state taxes like luxury tax, entertainment tax, etc., which have not been included in the system of credit availability. Similarly, there are a number of central value added taxes. Example, additional excise duty, additional custom duty, surcharge, cess, which has not been included in the scheme of Senvet. So this breaks the scheme of Senvet credit and imposes tax on tax. Let's go to the next slide and take a look at the example of two economies. In one economy, there is a credit available, and in another economy, no credit is available. If you will have a look, if the same cost, same product, which costs rupees 100 in both the economies, then the final selling price in the economy which does not have credit is 144 rupees and 10 paisa. Whereas in another economy, the price of product is only 132 rupees. What is the difference, my dear friends? The difference is only due to the availability of credit. The profits are same, the percentage of tax is same, but going on to the next slide, you will have a look that the difference is only due to the availability of credit. Rupees 11 is a dead loss for which no credit was available, and rupees 1.10 is the tax on tax. Next slide. GST will be an answer to all these problems. A continuous chain of set of will be given which originates from the original producer to the point of end retailer. Thereby all cascading effect of taxes would be removed from the entire supply chain. There will be no cascading effect of taxes. So with GST, our aim is to set up an entire chain of credit from the original producer to the final consumer. Next slide. In short, what is our aim with GST? The aim of government, the aim of consumers, the aim of everyone, stakeholders with GST is to have one tax for one country with one rate, one return, one payment and one assessment. My dear friends, think how would our structure look like if it's so simple, so easy to manage? There will be no problem of assessments, only one assessment for all the indirect taxes, only one rate all over India, only one return. It is the best part of GST. Now, let's start with history of GST. History of GST is not very old. It started in 2008, but the most important documents or the most important papers, you can say, came out in November 2009. That was the first discussion paper given by state governments. And in December 2009, we have the version of task force which gave a report on GST. After this, there were a number of reports by several authorities, but the most important bill was given by Government of India, the Constitutional Amendment Bill of 2014, which was passed in Lok Sabha in December 2014 and now currently with Rajya Sabha. Moving forward, now let's start what is GST all about. My first slide is the basic provisions. Let us start studying the GST as a whole. Constitutional Amendment Bill 2014 states that the power to levy GST will be given to both central government and state government for levy on goods as well as services. If you, my dear friends, remember, the major problem of GST before the GST era was to bifurcate between goods and service. But after this constitutional amendment, the entire problem will finish. Now there will be no problem, no need to bifurcate, to distinguish between goods or service, as the power has been given or the power will be given to both central government and state government. Coming to the next slide, GST will have two components: a central GST which will be levied by central government and a state GST which will be levied by central government, as the power has been given to both. Now, central GST and state GST would be applicable to all the transactions of goods as well as services for which were made for a consideration. Dear members, I again read this definition where it states that central GST and state GST will be applicable to all the transactions of goods as well as services which are made for a consideration. So my dear friends, with this definition, there is no need to bifurcate. all the taxes will be applicable in both if the transaction has been made for a consideration. Moving to the next slide. Taxes that would be subsumed, meaning thereby taxes that will no longer be applicable once GST is in force. Let's see all the central taxes which will be subsumed in GST. Central excise duty, additional excise duty, service tax, additional custom duty, special custom duty, central surcharges and cesses. Coming to the next slide, state taxes that would be subsumed in GST. Value added tax, entertainment tax not levied by local bodies, central sales tax, octroi, entry tax, purchase tax, luxury tax, taxes on lottery, betting and gambling. State surcharge and cesses will all be subsumed under the scheme of GST. More than 15 acts, more than 15 taxes, my dear members, will be removed once GST is made applicable. Besides, if you have a look at the number of acts, then multiply it by 30. Assuming we have 30 states in India, so many acts will be scrapped once GST is made applicable and is in force. Coming to the next slide of tax rates. Tax rate is a burning issue. We need to see what would be the tax rate once the GST is made applicable. Next slide. Revenue neutral rate given by task force was 11%. Now the question arises, what is the revenue neutral rate? As the name suggests, revenue neutral rate is that rate at which our economy would be revenue neutral. That is, the collection of taxes pre-GST and the collection of taxes post-GST will all be equal. The rate at which Indian government should levy GST and collect GST throughout India in such a manner that all the taxes before GST, which was subsumed in GST later on, should be equal to the collections made from GST. In other words, we can say that revenue neutral rate is the rate at which Government of India, central government and all state government works at no profit, no loss mechanism. So my dear friends, you will be astonished to know the revenue neutral rate was only 11%. Only and only 11%. However, task force suggested that although the revenue neutral rate is 11%, let's take the GST rate to be 12%. Next slide. Rajya Sabha Select Committee suggested that GST rate should not go beyond 20%. If you will see, there is a big shift from revenue neutral rate 11% to Rajya Sabha Select Committee saying that rate should not be beyond 20%. Let's go to the next slide and you will be astonished much more. A subcommittee of empowered committee of state finance ministers on GST suggested that rate should be 27%. My dear friends, if you will have a look at the revenue neutral rate, it was only 11%, whereas the state finance minister wants the rate to be 27%. However, later on this subcommittee withdrew their statement and said that we will rework on the rate of taxes. Why? Why there is a big shift in the revenue neutral rate of 11% to the current rate which governments are saying around 25 to 27%? The reason is exemptions. Task Force Committee assumed that except some basic exemptions, no exemptions would be given to any assessee, to any government for any reason. Whereas politically the state governments were not agreeing to the rate of 12%, and due to this pressure, exemptions would be given under current scheme of GST, because of which the R&R will be much higher. In my opinion, the rate of GST would be around 25%. Coming to the next slide, let's see what does our Constitutional Amendment Bill 2014 states. As my dear friends, this bill is a constitutional bill. It does not stipulate any rate of tax in particular. However, there are some points being made in this bill which make it amply clear that as a GST we will not have one rate of taxes. We will have multiple taxes. First rate of tax would be floor rate. Floor rate would be the rate at which items of basic need would be taxed, and we are assuming it that it will be a bit lower. Next rate would be the general rate. General rate is the rate at which items of general usage would be taxed. Third rate, it is the special rate at which precious items like gold, silver, bullion may be taxed. Constitutional Amendment Bill also made a very important point, although there is no discussion about this in the bill, which is the band rates. What is the band rates? Other than these three rates, Constitution gives the power to implement the system of band rates. Under the band rates, what we as a researcher assumes that on a specific item or a specific commodity or a set of items, rates will be given in bands. For example, for shoe industry, rate could be given as 15% to 17%, whereby all the state governments would be free to implement any rate between 15% to 17%. But I'll caution you all, there is no discussion about band rates except the mention of the word. This is only what I think personally the band rates would mean. Coming to the next slide of valuation. As you know, my dear friends, the GST bill is not out. GST rules are not out which will formulate what the valuation would be. But as an author, it's my personal view that valuation will form shape only after the rules are being framed, and in general the valuation would be consideration paid. Coming to the next slide on tax credit. Tax credit will be the most interesting part under GST, as all the acts would be repealed with the state, all the state acts would be repealed. It would be very interesting to know how the governments will give Senvet credit for all the sales and purchases. Let's study this. As you know, GST will be of two components, CGST and SGST, that is central GST and state GST. We need to study the tax credit for both the taxes. Central GST will be allowed to be taken as input tax credit only against the payment of central GST. That is to mean the credit of CGST will be available only and only against the output CGST liability. Similarly, the credit of SGST, that is state GST, will be available only and only against the output liability of state GST. In other words, cross utilization between central GST and state GST will not be allowed under the scheme of GST except IGST, which we will discuss and deliberate in the later slides. Coming to the next slide, my dear friends, this is a small table which I have prepared for you all, which again brings out the point very clearly that output GST, for output CGST, input CGST is available but input SGST is not available. Similarly, for output SGST, input CGST is not available but input SGST would be available. Coming to the next slide, problems related to accumulation of credit on account of refunds would be avoided. Dear members, dear friends, I have numerous clients who are still waiting for their refunds, whether it's the scheme of value added tax or it's the scheme of excise or any other act. For any reason this credit was available but the refunds are not given to them. This problem would be avoided under the scheme of GST. Refund or adjustment of central GST and state GST would be completed in time-bound manner in case of exporters, taxpayers purchasing capital goods, and taxpayers paying input tax at a rate higher than the output tax. I'll just give you a small example where you will come to know how fast the refunds could be processed. In one of the cases, I went to Singapore on an assignment and took a capital good, bought a capital good in the Singapore market, and while buying that commodity, I told the seller that I'll be exporting this or I'll be carrying this product out with me to India. At that time, the seller told me that you should get an invoice and present it to the custom authorities for the GST refund. Now, at the time of my going to flight, I saw a small chamber which said the refunds on GST. I immediately entered that chamber and presented the product which I bought from the Singapore market and gave the bill. My dear friends, within next 10 minutes, my entire refund was processed, and the gentleman sitting at the counter asked me whether you would like to have this by way of check or by cash. As you know, we generally do not trust authorities in the scheme of refunds. I immediately told him to give me cash refund. Within next 10 minutes, the refund was lying in my hand. I do not say that the process of refund processing in India would be so fast, but I sincerely hope we could use this Singapore model and process refunds as soon as possible. Coming to the next slide. This slide is basically an illustration on the entire scheme of GST. How will the goods move from a manufacturer to wholesaler and then to retailer? Let's study this example in a greater detail to understand more. Let us assume the cost of inputs is 100 rupees and the value added is rupees 30, final selling price to be 130. For the sake of ease, I have assumed the GST rate to be 10%. Then the output GST would be 13 rupees. Tax credit is available at the rate of rupees 10. If you look at the input cost, it was 100 rupees. Then of course, 10 rupees GST would be there in my balance sheet. Net GST payable will be 13 minus 10, that is 3 rupees. When the product is being sold to wholesaler for 130 rupees, he'll add a value of rupees 20 and final selling price of 150 to the retailer. And then the output GST would be rupees 15. Input GST 13 rupees, net GST payable by him is rupees 2. When the retailer buys this item for 150 rupees and adds a value or a margin of 10 rupees, selling it for 160 rupees, rate of GST to be assumed to be 10 again, output GST 16 rupees, input tax credit 15 rupees, net GST payable is only rupees 1. My dear friends, if you look at the entire chain, the product moved from producer to the final consumer without any breakage. The net GST payable in the entire chain is 16 rupees. That is, if you have a look at the final selling price of 160 into 10%, it comes out to be 16 rupees. Next slide on exemptions. What would be the exemptions? There is no definite word what would be the exemptions, but as an author, I myself have drew a scheme of exemption which is most likely to be passed. That is, the following exemption would most likely be available under the scheme of GST. But my dear friends, please note that this is not the final list. There could be much more exemptions in this list. My first exemption under the scheme of GST would be all public services of government, including civil administration, health services, formal education provided by government schools and colleges, defense, paramilitary and other government department. However, services provided by railways, post and telegraph, other commercial department, public sector enterprises, banks and insurance companies would not be available under the scheme of GST. Any employer-employee agreement would not be liable to pay GST under the scheme of GST. Next slide. Any unprocessed food article which is covered under the public distribution scheme should be exempt regardless of the output through which it is being sold. Educational services provided by non-government schools and colleges would also be exempt under the scheme of GST. Coming to the next slide. Interstate transactions. My dear friends, I again remind you, for all the intrastate transactions, that is the transactions happening, arising and completing within the same state, GST would be applicable, and GST will have two components, central GST and state GST. Now we are coming to the topic of interstate transactions. Under this head, interstate transaction, integrated goods and service tax, that is to say, IGST would be levied by only central government. The point here is to be noted that IGST, that is a tax on interstate sale and purchase, would be levied only and only by central government, and the rate of IGST will be equal to CGST plus SGST. Please note that the rate of GST will always be equal to the rate of IGST. Thereby, for a single product, whether you sell that product within the state or outside the state, the rate of tax would remain same. IGST will be applicable to all the interstate supply of goods as well as services. Person making the sale, interstate sale, would charge IGST, and then he will utilize input IGST, then he will use the credit of central GST, and then he will utilize the credit of state GST in order to discharge the liability of IGST. Next slide please. We'll have a look at the illustration of IGST. Let's take an example where a seller in Delhi sells the goods of rupees 1000 to a buyer in Gujarat on an interstate invoice for which the rate of tax is CGST 10% and SGST 10%. Input tax lying in his credit is CGST 50 rupees and SGST 70 rupees. If CGST is 10% and SGST is 10%, the rate of IGST would be 20%, 10% plus 10%. So output IGST is equal to 1000 rupees into 20%, that is 200 rupees. Output IGST is equal to 200 rupees. Now reducing therefrom input CGST first, which is equal to 50 rupees, and then input SGST, which is equal to 70 rupees. IGST payable in cash is rupees 80. Coming to the next slide, exports. Exports would be zero rated. My dear friends, till date, India has been working on the regime of exemptions, whereas there will be a paradigm shift from the scheme of exemptions to the scheme of zero rating. Now let us understand what is the scheme of exemption. Scheme of exemption is one in which the particular item is exempt and is not made chargeable to tax. I will repeat. Scheme of exemption is one in which basic charging section gives an exemption and does not charge the product for taxation. However, in zero rating, First, the product would be charged to tax, but at the rate of 0%, meaning thereby your output liability will always be 0. And if you get the entire credit, it will be given you as a refund. Full refund of taxes paid on inputs, input services and capital goods would be available in the case of exports. Coming to the next slide, imports. In case of imports, both CGST and SGST would be levied simultaneously. Besides, you will also notice that the basic custom duty would also be levied, as it has not been subsumed or will not be subsumed under the scheme of GST. However, full set-off of GST paid on imports would be given to the buyer who purchases the goods from importer. Next slide, please. Additional tax. Before coming to this slide, let's see if we have some questions. I have covered, there are some questions on exemptions, and I have covered the entire slide on exemption. Okay, now let's come to additional tax. Additional tax. The levy of additional tax on supply of goods in the course of interstate trade or commerce would be collected by state government for a period of 2 years from the state where the supply originates. Dear members, I again read these lines. Levy of additional tax will be applicable only on the supply of goods and not the services. Supply of goods in the course of interstate trade or commerce, which will be collected and retained by only the state government from which the supply originates. This tax will be applicable only and only for 2 years, and the tax cannot exceed 1%, meaning thereby AGST will be applicable for 2 years, and the rate of AGST might be less than 1% also. Coming to the next slide. Supply of goods. It will include stock transfers also. My dear friends, as the word written there is not sale but supply of goods in the Constitutional Amendment Bill, we assume that it will cover stock transfers also. However, with the later clarification by government, this stock transfer might be removed from the scheme of AGST. No input tax credit will be available for AGST. That is to say, it will be a cost to the company and he will not get any credit as is available of the CGST and SGST. Coming to the next slide. Supply of the goods originates. Parliament will formulate the principles with regard to the words place from which the supply of goods will originate. I think with AGST there could be a small problem which I like to bring into your knowledge by the help of an example. Let's take an example of Tata Jamshedpur or Tata Steel. Tata Steel manufactures steel and supplies it to a dealer in Gujarat for manufacturing car seats. Then, being an interstate transaction, let us assume that AGST is applicable at the rate of 1%. And while making this, once the car seats are being manufactured, these are supplied or sold in the state of Haryana to a Maruti factory for fitting the same in a car. then this being again an interstate transaction, 1% tax would be applicable on this transaction. Now once the car is manufactured, the car is supplied and sold to dealers all over India, again 1% additional GST be applicable on this sale, for which no credit is available. Respected members, if you will notice, then again and again and again and again 1% additional tax is made applicable on this transaction of transfer of steel, whether it is being transferred in raw form to the state of Gujarat, or in the form of a seat, or in the form of a car all over India. This problem Government of India must see and make it a point that this problem does not arise in the scheme of GST. Coming to the next slide, GST Council. As you know, GST will be one act which will administer all the taxes, or basically all the indirect taxes throughout the country. So we need an authority to take all the decisions. The authority would be GST Council. What would be the powers and duties of GST Council? The powers and duties of GST Council would be to decide the principles for levy of GST, to decide the principles for apportionment of IGST between central government and state government. Here, my dear friends, if you remember, then IGST is to be collected by central government. However, it is to be apportioned between state government and central government based upon a formula which GST Council will give. GST Council will also decide the principles for the supply of goods or services. GST Council will decide what would be the exemptions in the list of exemptions. GST Council will decide the threshold limit for exemption. Coming to the next slide, point number 6. Special provisions would be there in GST with regard to the state of Arunachal Pradesh, Assam, Jammu and Kashmir, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, Himachal Pradesh and the state of Uttarakhand. These special provisions would also be decided by GST Council. GST Council will also decide when would GST be made applicable to petroleum products. Any other matter which the GST Council may decide, it may take a decision on it. Coming to the next slide of voting. Now the point is, how will GST Council function? What would be the scheme of voting? Who will decide? Respected members, in GST Council, 1/2 of the total number of members present and voting will form quorum. Let us suppose 100 members are present, then 50 members would be the quorum in the GST Council. Every decision of GST Council shall be taken with the majority of 3/4. That is to say, 75% of people must vote on a motion to pass the same. Central government votes will have 1/3 weightage, and state governments, all state governments put together, will have 2/3 weightage. I'll bring your attention towards the scheme of voting once again. We need 75% votes to pass a motion. The power of central government is 33%. That is 1/3 of the total number of votes. Respected members, if you look very closely, then without the assent of central government, no motion can be passed in GST Council, even if all the state governments are on one side. With this provision, we assume then that there will be uniformity in the structure of GST all throughout India. Coming to the next slide of procedural aspects. As I have discussed in my first slide, the aim of GST is not only to reduce the tax, but the aim of GST is also to reduce the compliance. As such, the GST rules have not been formulated, but in task force report, some forms were given and which stipulated that under the scheme of GST, form number GST 1 would be used to make all the payments of GST and which will also act as a monthly return. In GST 1 form, you will have to detail all business to business transaction in order to compute GST. Coming to my next slide, and this would be my last slide. The title is Assessment Agency. I have been to many seminars, I have been to many discussions, but the biggest question of a businessman, of a small businessman is, who will assess us? We will fall in the jurisdiction of central government or state government or both. I think broadly classifying, there would be three options for making assessment of any assessee. Option number 1, central government and state government will make parallel assessments of their own portion of taxes. That is to say, central government will make an assessment of central GST and state government will make an assessment of state GST. This will be an overlapping of powers. Whose decision will hold true, whether state government or central government? So I think, according to me, this option is not valid and government should avoid this option as much as possible. Option number 2, central government will have power to make all the assessments above certain limits. Example, 100 crore. Any business, this is only an example, my dear friends. Any business having a turnover of rupees 100 crore or more would be assessed by the authorities of central government, whereas any businessman having a turnover of less than 100 crores would be assessed by a state government agency. Option number 3, for all the businessmen which are having offices in more than 2 states, assessment would be made by a central government agency, and for all other businessmen, assessment would be made by the respective state government agency. According to me, a mix of option number 2 and option number 3 would be great, and option number 1 is, I think, should not be used by the government of India. Thank you for the patient hearing. I hope GST made sense to you all, and now let's take some questions. I have covered most of the problems, but I'll take one question of Mr. C. Anshul Narangji. How will GST benefit the consumers? As you know, the Senvet credit would be seamlessly available, whether it's inputs, input services, or it's capital goods. When the benefit of inputs is absolutely available and there will be no cascading effect of taxes, then the prices of commodities would be lower. The biggest and most important benefit for a consumer would be lowering of prices. Next, with the ease of business, with the uniform procedure, there will be more investments falling in India. There will be more competition, more choice. That is to say, you will have lower prices and higher choices. The next question is by CA Sweta Vora from Bhuj. Her question is, if a supplier makes a sale within the state, whether he needs to pay CGST or SGST. Respected members, as I have told, GST will be formed of 2 components, CGST as well as GST. On all the transactions of goods and services or both within a state, both taxes would be applicable. Let's take an example. If a goods of rupees 1000 are sold within the state and the rate of tax is 10% CGST and 10% SGST, then 20% would be the rate of GST, and the taxes that you need to collect is 1000 cross 20%, that is rupees 200. Next question is by Hemant Parijji. If one company has one plant in Maharashtra and is having 6 branches in 6 different states, how many registration will the company take? Respected members, as you know that GST rules are not being formulated, they are still under process. So I cannot answer this question for sure, but I hope government will decide and give a centralized registration to the single factory in Maharashtra, by way of which it can file a single return for all the 6 units, making different supplies from all the 6 offices. CS Siddharth Bhardwaj from Dehradun. What will be the status or validity of existing registrations under various CST, VAT, excise, service tax? So after the GST is implemented, you don't need to register yourself with all these authorities. You will get a single registration with GST authority. Your all the registration would be made or being converted into the GST registration. You will lose all the earlier numbers. You will have only one GST number. Okay. There is one question by Mr. Bansal from Delhi. This question relates to one of my slides in which it states, if you remember, okay, can we go back to the slides?
Yes.
The slide, I don't remember the number. There is a slide of one example. Slide number, it will be 5th or 6th, tax on tax. So I'll basically tell you what Mr. Bansal is asking. He's saying once the cascading effect of taxes is removed, then the tax revenue collected by the government of India would be lowered. This is right. But if you'll have a look at the task force report, the revenue neutral rate was only 11%. So if we are able to cover all the assesses in the scheme of GST, our revenues would be much higher with increasing the base of assesses falling under GST. The next question is by Mr. Bansal again from Delhi. How do we pitch in for our new clients? This is the best question. I think you don't need to pitch in. You just need to gather a lot of knowledge. Once you have a lot of knowledge and you specialize in the field of GST, people will come to you, work will come to you. Nothing will come to you when you sit at home, but something will come to you when you go out in the market and show to the people that yes, I have the knowledge of GST. I think the best part of you is you are taking this session and learning about GST. The next thing you must do is sit back, have a book on GST, read it inside out and start writing articles. Start presenting to your current clients. Let them know that you are doing it. You have social network, you can post your articles there. CS Siddharth Bhardwaj from Dehradun. What will be the applicability and status of C forms? Respected members, as I have already discussed, GST rules are still not being formulated. They are still not being formed. So we don't have any idea about whether there will be form C or not. But yes, whatever it may be, it will be available online on the portal of GST, and it will be very simple. CA Basant Rathi, what is the best material available to understand GST more deeply? I think the website of ICAI is great. You must have a look at it. A lot of material is available online at the website of IGST, or you can buy a book. That's what I can advise. CA Nitin Vashisht from Delhi. Will there be a compulsory client audit under the scheme of GST? Sorry, respected sir, I don't have any idea about whether we'll have a compulsory audit under the scheme of GST or not. But yes, there will be audits. Whether it will be carried out by departmental officers or chartered accountant, we need to wait and watch. Okay, one very interesting question. As we know, the credit of SGST will not be available against CGST. That is to say, cross utilization between central GST and state GST will not be available. So the question from CA Arpit from Delhi is, how is it different from the current scheme? The credit of Delhi value added tax or the local value added tax is not available against central value added tax, excise and service tax. Respected members, if you look at the scheme, you will have a single GST rate across the board. Let us suppose we have a rate of 15% of GST, out of which 10% goes to CGST and 5% goes to SGST. Then at every stage of value addition, do you need a cross utilization? There will be no need. All the need of cross utilization would be avoided. If the rate of CGST is 10% and SGST is 5%, then there is no need of cross utilization. 10% would be applicable on the value added and 5% would be applicable on the value added. The need will only arise when the rate of tax between CGST and SGST change. When the rate of GST will change. My dear friends, till now it is being planned by government to have as many lower rates as is possible. Even though the rates are different or the rates are lower, you will get into the scheme of refund. The ratio between CGST and SGST will remain same. If you have a refund of CGST, then you will also have the refund of SGST. If you have a liability of CGST, then you will also have a liability of SGST. So the reason or for the need of cross utilization won't arise. Okay. Shipra Agarwal from Agra. Great question. I'll read you. GST is a consumption based tax. So how will we decide the place of taxability for Flipkart, Snapdeal and Amazon? All the e-commerce websites. Let's wait for the GST rules. As I've already told you, the place of supply rules are not being formed. It are being formulated by the government of India. So before that, I cannot say anything on this matter. Okay. What is the possibility of minimizing check posts and will it improve the logistics? Yes, I'll advise you to have a look at the task force report. In the task force report, there is a separate column of what the check post would be. It would be, they want it to be as similar, as close as to the check post as is applicable in the United States of America. What happens there is, if we have a truck full of goods, then the truck crosses the check post and it is it is not allowed to stop there. The check post policeman does not stop a vehicle from moving from one state to another if the weight of that vehicle is same or similar as it was while crossing the previous check post. Let us suppose a truck weighing 500 kgs moved from the Delhi border and it is weighing 500 kgs, and then it moves to the Punjab border and there again it is weighing 500 kgs, then there is no problem or no issue in stopping, no point in stopping that vehicle and checking what is present. This is an ideal situation. This is an ideal situation. I do not say that India will have such a big infrastructure all over India in next 1 decade or so, but slowly we will be moving towards it, and we hope there will be lesser number of checkposts, especially when the rate of tax, the rate of IGST is equivalent to GST. There can be no tax evasion whether you make an intrastate sale or an interstate sale, except to the extent of additional GST being made applicable of the rate of 1%. I thank you all for giving me the patient hearing. I hope GST will benefit you and hope to see you someday. Thank you.